Hi, this is PC, and this episode is super important because one of the most important thing when picking a coin, picking a cryptocurrency online is looking at total supply versus circulating supply. This kind of statistics actually tells you how much of a difference there is between uh, all the supply that there is and the supply that you can find on different exchanges. And why is that important? Because, for example, if there's only 1% of the total supply available on the market, then that means that the developers or the team behind the project will eventually start selling, causing the crash of the coin of the price of the coin, and you want to avoid that, of course. So of course the principle is basically the more circulating supplies, the closer circulating supply is to the total supply, the better for the coin, the better for the health of the price. So why something like that happens? Why total supply differs from circulating supply? The main thing is that the team will reserve some of the coins for themselves, for the team, and that's perfectly fine. Something like between 5 to 20% is actually pretty standard, so that's fine. Everything above that may seem a little suspicious, especially if the team reserves something like 80% for themselves, then that might be an obvious scam. Unless they have a really, really good reason for that, or there's some kind of a program that this kind of supply will convert to circulate supply in a good way. But that's much harder to do. So you should really look about for the total supply versus circulating supply. Another thing that can go into the total supply not being available on the market is VC investments and generally investments from angels or any kind of other institutions. So that kind of a supply, basically those coins will be vesting, meaning that there's a locked up period for those coins. So for example, a VC can buy a coin which is worth right now $1, say, at a discount for 30 cents. That's a pretty standard thing. And then, but with the caveat of that coin being available for them to sell only in the next year. So they have to wait for 12 months to actually sell the coin and come back then. So that kind of thing is really important to understand, because if you see these discrepancies between total supply and circulating supply, then you might look at the tokenomics and everything will be clear. So yeah, if you look at that and then you see that there's a bunch of VCs, they took up like say 40%, and then the vesting period is 12 months, then you should expect the price to drop heavily in this period, especially when the vesting is like, for example, the coin unlocks every 3 months, and you will expect, like, you will see the drops in the price in those periods of times, because VCs want to get out of the investment. They want to make money for their LPs, for their limited partners. So that's pretty standard to expect. So yeah, that's a really important thing to understand. Also, if you see that there's an unlimited supply of coin, then probably that's a not good investment in general. There are many coins with unlimited supply. Ethereum was one until some point, but if you have a good mechanism for supplying new coins, and if you have the mechanism that is not related to like any kind of people voting for whether we want to have more supply or not, then probably that's fine. But you should generally beware of the infinite supply coins. They usually are utility tokens. So one example would be the recent coin with GST from the Steppen app. So this is moved to Earn app, or from the Axie Infinity. The coin, I think that was SLP, the utility token. Basically, they have the unlimited supply. They're printing new tokens regularly, and the reason of that is, of course, for people to use in game. So, as an in-game utility, that's fine. As an investment, definitely try to avoid those things, because you probably won't make any return in a longer period of time. Those type of coins are related only to in-game utility. Unless, of course, you can balance well that, but that's super hard to do. So yeah, so that's the basics on total supply versus circulating supply. Those two metrics are always available, especially on like CoinMarketCap or CoinGecko. You can see those two statistics, and you should really look at that before buying any kind of token. Thank you for watching. So don't forget to subscribe to the channel, and see you in the next episode.